Hello and welcome to Lone Investor. So as mentioned last time, I'll do an update video after the CPI data and the FOMC meeting. So for core CPI data, as I was expecting, we do see a slowdown of inflation. It dropped from 6.2 to 6%. However, on the CPI that include oil and food, it increased from 8.3 to 8.6%, and it is the highest increase in percentage so far. As a result, the Fed has increased the interest rate by 75 basis points. So previously, we were looking at the 2-year bond yield, which is closely correlated with the Fed fund rate. So for the past 2 months, it was consolidating between 2.5 to 2.8%. And with the slowdown on the RSI, it seems to be waiting for some kind of a good news for a rollover. But since the CPI data was released on June 10th with the higher than expected inflation rates, it has jumped 60 basis points, jumping from 2.8 to all the way to 3.4%. And then it has decreased a little bit after the FOMC meeting. As for the end of year forecast interest rate, it is 3.4% by December and 3.8% by the end of 2023. So a forecast of 3.4% will be sustained for pretty much the whole year throughout next year. As you can see, the 2-year bond yield has priced in the 3.4% even before the FOMC meeting. So first of all, let's take a look at the Nasdaq 100. So this is the Nasdaq 100 in weekly chart, and this line is the 200 weeks moving average. Now, throughout the history, there are only 2 major times that it has broken down the moving average for more than a few months. So one of them is the dot-com bubble, and the other one is the '08 financial crisis. And every time when it touches the 200 weeks moving average, it will have some sort of a support or some sort of a bounce. And currently, the Nasdaq 100 is at 11.1K and the moving average is sitting at 10.8K. And you may have noticed before the financial crisis drop and before the dot-com bubble, it touches the 200 weeks moving average and it did continues to go lower. But let's zoom in on these 2 cases. So when it touches the moving average on March 2008, it had a 20% rally before going down further. And same thing in January 2001, it had a 30% jump before going lower. So whether you think we're currently well pricing in the Fed rate hike, and we have seen the peak of inflation and inflation will be coming down, and you're expecting another bull run, or if you're expecting some sort of a bear market rally and then it will continue to go down lower. Either way, if history were to repeat itself, when it touches the moving average, we might see some sort of a 20 to 30% bounce. That will make the rally hitting this resistance zone right here, as you can see it as a support and resistance on a few times on the Nasdaq 100. So in the short term, I do say pay very close attention to the Nasdaq 100 when it hits 10.8K. That will be very close to the short-term market bottom. And we have looked at the market breadth report. That is the percentage of stocks in the Nasdaq 100 that is above the 200 days moving average. And yesterday, we're actually lower than the COVID low. And the only time that is lower than currently is the '08 financial crisis. And this data only goes so far, so it doesn't show the dot-com bubble. But I would imagine the dot-com bubble would be somewhere near the '08 crisis. So the lowest we have hit is 4%, and you don't really see this kind of drop often. And in the past 15 years, you only have like 4 or 5 times where it dropped below the 10% level. So if I highlight the times where it reaches this low, we have 1, 2, 3, and 4 times that is marking the market bottom, and we have 1 out of 5 times that it continues to drop a little bit lower. So if the Nasdaq 100 do drop below the 10.8K level, then I'm pretty sure the breadth level will be down to like 1% area. But if you don't look at the short term, if you're preparing for a possible further drop and you're willing to ride out for more than 2 years, currently it is still a very good buying opportunities. And then we'll also take a look at the VIX. So ever since November when the Fed starts to mention the rate hike, the VIX has been going upward. And currently it is at a consolidation range. As you can see, it is getting more narrow and it is having a more frequent bounce compared to before. So at the end of a consolidation, it will either go up or down. So if it does go up, we'll be looking at a rapid drop in the stock market. And if I put a horizontal line, the VIX around 50 would be a very good buying opportunities. And COVID and financial crisis actually pushed up the VIX all the way up to 80. But if you zoom in during COVID, it gone up to 80 and it will come back down within a few weeks. For the financial crisis, after breakup of the 50 range, it came back down under 50 in about 3 months period. So in the short term, look for the Nasdaq 100 to hit the 10.8K level. And for any possible rapid breakdown like we had in the '08 financial crisis, then we would see the VIX having a breakout and going up to the 50 area. So entering at 10.8K or when VIX is over 50%, we will most likely put the market level at close to the bottom price. And as for the short-term resistance zone, it will be 13.3 to 14K. A quick update on Bitcoin. So Bitcoin is very close to the last price channel. It will be at the 19K level, and it will most likely hit that when Nasdaq 100 hit the 10.8K zone. And if we have a breakdown and when VIX go over 50%, we might see a similar drop like here when we have the COVID. So it has dropped 37%. So if it were to drop 35% from the last trend line, it will put the level at around 12.3k zone, and the 12.3, 12.5 zone act as a resistance in the past few times, and it did act as a support back in 2017. So if you still believe in Bitcoin and you're looking to average down, then 19k and 12.5k would be a good level to enter. But with that said, we might see the 2-year bond yield to consolidate between this zone until July 13, where the next CPI data is released. And on the fixed chart, July 13 will be almost at the end of the consolidation range. So I guess that will determine whether the VIX will break up or down by then. So this is it for today. If you liked the video, subscribe to my channel and give me a thumbs up, and I'll see you guys next time.